You remember 1973. You remember the mile-long gas lines, the shuttered factories, and the weight of an economy that felt like it was slipping away. Today, the media is using those same old ghosts of stagflation to haunt your retirement, trying to scare you back into a basement of fear. But let's be honest, this isn't your first rodeo. You've lived through the Cold War, the dot-com bubble, and the Great Recession. While the experts on the news fixate on daily oil prices and bad jobs reports, they are missing the forest for the trees. A massive wealth-building opportunity is forming right now in 2026, one that could define your family's legacy. You've spent 40 years building your nest egg, but the greatest threat isn't the market, it's the silent thief of inflation. Since 2000, sitting in safe cash has actually cost you 80% of your purchasing power. Your hard-earned dollar buys less today for your grandkids than it ever has. We can't afford that risk anymore. The media wants you to believe the world is ending because drama sells headlines, but the data tells a different story. In the last 70 years, true stagflation, the combination of high prices and no jobs, has only happened once. We aren't in 1973 anymore. We are at the edge of a new bull cycle bigger than the internet and electricity combined. This is your chance to turn uncertainty into the last great wealth window of your lifetime. Right now, the market is paralyzed by fear over oil prices and rising unemployment. When oil goes up, it costs more to ship and manufacture goods, which drives up the cost of living. People fear a total stock market collapse, so they jump out and sit on the sidelines. This is a huge mistake because it's based on a series of ifs and worst-case assumptions. Even if a recession hits, history shows it doesn't stop the long-term growth of quality companies. I'm going to show you why the worst possible outcomes didn't stop wealth creation in the past. I'm also revealing a new stock that represents the new wave of this AI revolution. But first, I need you to focus. Don't buy anything yet, just listen. We are living through a time of agents of chaos and unexpected leadership like Donald Trump. Markets are panicking as if we've never seen geopolitics or wars in the Middle East before. The truth is, mainstream media is a waste of time for the modern long-term investor. Stagflation was horrendous, but it was finally healed by a man named Paul Volcker. By 1982, Volcker's extreme rate hikes had healed the U.S. economy and ended that environment. Thousands of headlines since 1960 have warned of stagflation, but it has a 0% occurrence since 1973. We are talking about a very high-risk event, but an extremely low probability one. For oil to cause stagflation today, 4 specific things must happen simultaneously. First, we need a 50% to 100% increase in oil prices, sustained for a full 12 months. An 18-day spike in oil due to war is simply not enough to cause stagflation. Second, the underlying macroeconomics must be fundamentally bad. Right now, our GDP is solid and the underlying economy is actually quite healthy. Third, none of this matters if the Federal Reserve does not raise interest rates. Raising rates is the final push that starts the stagflation cycle, but the Fed is currently doing the exact opposite. They are in a rate-cutting cycle. The Fed has moved into a quantitative easing mindset. The incoming Fed chair, Mr. Wersch, is very much on board with this cutting direction. Whether the conflict lasts weeks or months, the Fed is not going to increase rates. The market is shooting first and asking questions later by pricing in the worst-case scenario. Following headlines is a terrible way to invest, yet many people do exactly that. In my academy, we don't predict the future. We prepare for every scenario. We use the Buffett method. Be greedy when others are fearful. While the S&P 500 went up 90% in 3 years, smart money was sitting on cash. They wait for the market to drop to load up on quality companies for cents on the dollar. Markets are cyclical. They move from hope to euphoria, then despair, and back again. As long as we buy quality companies or broad indexes like the S&P 500, we win long term. The bullseye for investing is when the markets are most depressed. Most investors sell exactly at the moment they should be buying out of panic. Between 2000 and 2025, we faced the dot-com crash and the subprime crisis. We even had a lost decade where the S&P 500 went nowhere for 10 years. But if you expand your view to 20 years, the S&P 500 has never lost money. Never. In 2020, the COVID crash dropped the market 30% in just 60 days. The 2022 bear market felt long, but it lasted only 10 months. The average bull market in the US lasts 4 to 5 years. The market is statistically rigged to be bullish. 75% of years are green. If you were at a roulette table where 4 out of 5 slots were red, you'd bet on red every time. If you invested at the absolute peak in 2000, you'd still be up 350% today. But if you sat in cash, inflation destroyed your ability to buy a home or help your family. Inflation is a hidden tax on the middle class. The rich are shielded from it. Trying to time the bottom is gambling, and 99.9% of people lose their savings doing it. Instead, use the double-down DCA method for your retirement. If the market drops 10% below its all-time high, you triple your investment. This method yielded a 364% return over 25 years, outperforming the rest. Now, let's talk about the biggest opportunity of our era, artificial intelligence. AI is a transformation larger than electricity or the internet. I focus on the picks and shovels, the infrastructure that makes AI possible. Energy was the first bottleneck, leading to massive gains in companies like VRT. But a new bottleneck is forming that most people are ignoring: memory. Look at the NVIDIA H100. It was the revolutionary chip just 4 years ago. It pushed the absolute limits of what our current machinery can manufacture. NVIDIA's Blackwell packs twice the transistors on the same real estate to solve this. But more processing work means more context, and context requires memory. The Achilles heel of AI right now is its limited context and memory. As we move to agents, robotics, and AGI, memory demand is going vertical. We have 10 times more memory demand today than just 4 years ago. We will eventually need 100 times more memory than we are producing today. 3 companies control 90% of the world's memory: Micron, SK Hynix, and Samsung. If you want to invest in AI without the hype, you must own the memory triad. It takes 5 to 10 years to build the factories needed to compete here. This means these 3 companies have zero competition for the next decade. While the S&P 500 is expensive, Micron is sitting at an incredibly low valuation. Micron is specifically focused on high bandwidth memory, HBM, the lifeblood of AI. Unlike its competitors, Micron is a US-based company. Their revenue is $42 billion, up 45% in just 1 year. Their free cash flow has exploded by a staggering 3,000%. Micron maintains an operating margin north of 30%. This is a fundamental deep value opportunity in the most important sector of the decade. Own the entire stack: ASML for lithography, TSMC for manufacturing, and Micron for memory. Add in the cooling and energy plays like VRT, and you have the complete AI blueprint. Stop chasing the scary headlines and start focusing on the choke points of the future. This is how you build generational wealth, by being prepared when the opportunity arrives. Don't let the fear of 1973 keep you from the promise of 2026. Your retirement security depends on your ability to see what others are missing. Focus on the picks and shovels, ignore the noise, and secure your family's future. I'm adding Micron to my top stocks list because it is the supply chain of memory. This is the new wave of investing, and it's happening right now. Get your head out of the gutter of fear and look at the actual data. The risk in the stock market is psychological. The risk in cash is a mathematical certainty of loss. We are at the dawn of a cycle unlike anything we've seen in decades. Get ready. This is your time. Prepare, don't predict, and I'll see you in the next one. Peace.